Hey everyone, and welcome to our deep dive on trading psychology.
Yes, today we're tackling the new trading for a living.
This book is packed with insights, and we're going to distill it down to what really matters for success.
Cutting through all the noise and hype you see out there.
Exactly. And, trading can seem intimidating, right?
Oh, absolutely.
So many moving parts, charts, indicators.
It's easy to get overwhelmed.
But here's the thing, even with all the technical stuff down pat,
Yeah.
your own mind can be your biggest obstacle.
You hit the nail on the head there.
That's why we're focusing on the psychology first.
Right, because it's foundational.
The book actually lays out 3 pillars for success: psychology, market analysis, and risk management.
3 pillars, got it.
But we're starting with psychology because if your head's not in the game...
You're sunk before you even begin.
Exactly. And right off the bat, the book makes this brilliant comparison.
Okay, I'm intrigued.
It says trading commissions are like death and taxes.
Haha. Unavoidable?
You got it. They're just part of the game.
But it's not all doom and gloom, right?
Not at all. The book's point is that just like with taxes,
Yeah.
you can optimize to minimize the pain.
Right. Smart strategies.
So choosing the right broker, right trading style.
All these can make a huge difference to your bottom line.
It's about what the book calls trading longevity.
I like that phrase.
Like you want to be in this for the long haul, not burn out after a few crazy months.
Makes sense. Slow and steady wins the race, right?
Absolutely. And this reminds me of a story from the book.
Oh, a story. I love those.
Yeah, it was about a client of the author's over in Greece.
Okay.
This guy was getting absolutely hammered with commissions.
Ouch. How bad are we talking?
His broker, a major European bank, charged him a $40 minimum on every single trade.
Whoa. You gotta be kidding me.
Nope, $40 every time he hit the buy or sell button.
That's gotta hurt, especially if you're trading frequently.
Oh, absolutely. Now, imagine my own brokers.
Yeah.
They charge like $1, maybe $2 per trade.
Okay, that's a huge difference.
It might not seem like much at first, but those fees compound.
The slow bleed, that's what gets you.
Exactly. And this is where the book's focus on psychology really shines.
Right, because it's about making smart decisions, not impulsive ones.
Because if you're constantly panicking,
Yeah.
chasing the latest hot tip...
Yeah, you're just gonna make those brokers richer.
Precisely. And speaking of chasing things you shouldn't,
Oh, what's that?
the book dives into this fascinating concept of market cycle gurus.
Interesting. What's that all about?
You know those personalities that pop up? Seem to predict every market move.
Ah, yeah, they gain huge followings. Everyone hangs on their every word.
And then, poof, they disappear.
Gone, just like that.
Like they never existed. And the book's point is,
Yeah.
it's not that these gurus are necessarily right or wrong.
Okay, I'm listening.
It's that the market aligns with their particular theory for a while, then shifts.
Ah, so they're in sync for a bit, then the music stops.
Exactly. The book uses a brilliant analogy. These gurus are like fashion models.
Oh, I like where this is going.
One year, it's all blondes, everyone's loving them.
Right, they're on every magazine cover.
Then suddenly, bam, it's all about brunettes.
The blondes are out, the brunettes are in.
And just like that, those once hotshot gurus...
Are yesterday's news.
Exactly. And this is where understanding crowd behavior becomes so vital.
Yeah, because you got to see beyond the hype.
The book argues that recognizing these cycles, not getting caught in the frenzy.
That's a key to making sound decisions.
So don't blindly follow the crowd, especially those gurus who act like they have all the answers.
No crystal ball. Yeah.
None whatsoever.
Yeah.
And here's the thing. Even when you think you're being logical,
Yeah.
the urge to follow the crowd is strong. It's human nature.
Deeply ingrained.
Exactly. So successful traders, they learn to recognize this urge.
Okay,
They
interesting.
either ride the wave, if it's in their favor,
Smart.
or they step aside and let it pass.
But they never fight it head on.
Right. The book makes this great point about how crowd behavior creates these trends. Yeah. And these trends can be like an avalanche.
Whoa. Powerful image there.
Impossible to fight against as an individual.
So you either get swept up or get out of the way?
Exactly. And this ties back to what we were saying about fear and greed.
Right, those primal emotions.
The book actually highlights that fear is a much stronger motivator than greed.
Interesting. So we're more driven to avoid pain than to seek pleasure.
It seems that way.
Yeah.
And this explains why panic selling
Yeah.
often creates much sharper drops in the market than buying frenzies.
So that downward spiral, it can be brutal.
It can. And that's something to keep in mind when you're setting stops, managing your risk.
For sure. Got to account for those psychological dynamics.
The book even has this bold piece of advice. Never place your stop-loss orders at obvious chart levels.
Okay, so why is that?
Well, think of it as setting up a target-rich environment.
A target for who?
For those more sophisticated players, the ones who are looking to trigger those stops and take your money.
Ah, so you're practically inviting them in.
Exactly. And this really highlights how trading is a game of psychology just as much as it is technical analysis.
Right, you're interacting with other players, trying to anticipate their moves.
And if you don't understand the psychological dynamics at play,
You're playing blind.
makes you realize it's not as simple as just picking stocks and crossing your fingers.
Not at all. It's a lot deeper than that.
But then, if we can't just rely on profits and losses to gauge our success,
Yeah, how do we measure how well we're doing?
that's where the book introduces this unique concept called trade grades.
Trade grades. I haven't heard of that before.
It's a way to evaluate the quality of your entries and exits, regardless of whether a trade was ultimately profitable.
So it's not just about making money, but how you're making it.
Precisely. It's about consistently buying low and selling high, even if a specific trade didn't go your way.
So you're essentially grading your own performance.
Right. Encouraging that continuous learning and improvement.
I love that. Can you give an example of how these trade grades work?
Absolutely. Imagine you buy a stock at $19.25,
Okay.
and the day's price range was between $19 and $20.
All right, I'm following.
The book has a formula, and in this case, you'd have a 75% buy grade.
The 75%, not bad.
So even though we don't know if that trade made money,
Right.
we know the entry point was pretty solid.
Snagged it in the lower half of the day's range.
Exactly. Shows good timing and execution.
I like that system. Much more insightful than just looking at the final profit or loss.
Right. It emphasizes this core message from the book. You have to make the money.
Not some guru, not some magical system.
No one else is going to do it for you.
And while a good system, good technicals can give you an edge,
Yeah.
in the short term, the market is full of randomness.
So much noise and chaos.
And that's why this book, it really focuses on the psychology, the discipline, the risk management.
Because those are the things you can control.
Absolutely. You can't control the market, but you can control yourself.
Couldn't have said it better myself.
So even though we've just scratched the surface here,
It's clear that understanding this psychological side of trading,
it's foundational.
it really is. It's the key to unlocking everything else.
The market analysis, the risk management, your long-term success.
We'll be diving into those other pieces in the next parts of our deep dive.
Sounds good.
But before we wrap up part one, I want to leave you with this thought-provoking question inspired by the book.
Okay, hit me.
If trading success isn't about predicting the future,
Yeah.
what is it really about?
That's a good one.
What skills, what mindsets set those who thrive in the market apart from those who just get churned up by it?
Something to ponder, for sure.
Think about that, and we'll be back soon with more insights from the new Trading for a Living.
Looking forward to it.
All right, welcome back to our deep dive into the new Trading for a Living.
Picking up where we left off, right?
In part one, we really dug into that psychological side of trading.
Yeah, how mastering your mind can give you a real leg up.
And you left us with a great question.
Oh yeah, that cliffhanger.
If trading success isn't about predicting the future, then what is it really about?
It's a question that gets to the core of what this book is trying to teach us.
Absolutely. So let's dive into some more specific strategies for actually building that winning trader's mindset.
Okay, I'm ready.
One of the key takeaways from the book is this idea of having a solid trading system.
A system, huh?
And when they talk about system,
Yeah.
it's not just like a set of rules for entering and exiting trades.
Okay.
It's more like a comprehensive approach.
Right. So it's bigger picture.
It incorporates your psychology, your risk management, your market analysis.
So it's like all those pieces working together.
Exactly.
Yeah.
It's like having a roadmap for navigating the market.
Yeah, that makes sense. Like a guide.
But how do you even begin to develop a trading system that works for you?
Well, the book really emphasizes understanding this concept of support and resistance levels.
Support and resistance.
Now, for those who are new to trading,
Yeah.
support and resistance are basically price levels where the market tends to stall out,
Like it hits a ceiling or a floor.
Yeah, exactly. It either bounces back down or it breaks through.
So if a stock keeps hitting, say, $20, then bouncing back down.
That might be a resistance level.
And if it keeps finding support at $18.
Boom, support level. And these levels, they're important because they reflect the collective psychology of the market.
The psychology. How so?
It's the point where buyers and sellers are basically duking it out,
Battling for dominance.
Exactly. And by identifying these levels, We can kind of anticipate where the market might turn.
And adjust our trading strategies accordingly.
That's the goal, right? To be one step ahead.
So these levels, they're not just random lines on a chart.
Nope, they're driven by the emotions, the decisions of all those traders out there.
Wow, that's really interesting.
It is, and the book actually gives you specific techniques for identifying them.
Oh, like what?
Using moving averages, trend lines, chart patterns.
Okay, so we're starting to incorporate some of that technical analysis stuff.
Yeah, it all starts coming together.
But how do you know if a support or resistance level is actually strong enough to influence the market?
Well, that's where volume comes into play.
Volume, as in how many shares are being traded.
Exactly. The book stresses understanding the relationship between price and volume.
So volume tells you how much conviction is behind a move.
Yeah, like if a stock breaks through resistance, but on low volume, it might not be a real breakout, could be a false signal.
But if it happens on huge volume,
That's when you pay attention.
high volume confirms the trend. Low volume.
Suggests waning interest, maybe a trap.
And the book even introduces this thing called the force index.
Right. Oh, yeah, the force index. That's a good one.
It combines price and volume, right?
It does. It's a way to kind of gauge the strength of the bulls and bears in the market.
So like taking the market's pulse.
Exactly. You can see those shifts in momentum where the power is tipping.
From buyers to sellers, or vice versa.
Boom. That's what you're looking for.
Okay, I'm starting to see how all these pieces fit together.
It's like a puzzle, right?
We've got the psychology of crowd behavior, the technical tools like support and resistance.
Yeah.
We're analyzing volume. We've got the force index.
And it all starts to form a system.
It really does. And the book doesn't stop there.
Oh, no. There's more.
It goes on to explore all sorts of trading systems and strategies.
Like what?
Everything from the classic triple screen trading system
I've heard of that one.
to more specialized approaches like impulse and channel trading.
That sounds intense.
But the key takeaway seems to be finding a system that fits your style, your risk tolerance.
You got it. The book encourages readers to experiment, find what works for them.
There's no one-size-fits-all approach.
Definitely not.
But regardless of the system, the book stresses discipline and consistency.
So even if you have a winning system, if you don't have the mental fortitude to stick to it.
You're going to self-sabotage.
Exactly. Back to that psychology piece we talked about in part 1.
You need to control your emotions, manage your risk, avoid those impulsive decisions.
It all ties together.
And this reminds me of another concept from the book, the trade APGAR.
Oh, yeah, the trade app guard. That's a cool one.
Can you explain what that is?
Sure. It's basically a tool inspired by the APGAR score they use for newborn babies.
For babies.
Yeah, it's a way to quickly assess their health right after birth.
Okay, I see where this is going.
So the trade APGAR, it's a simple scoring system that helps you evaluate a potential trade.
Before you even enter it.
Exactly. It's like a quick health check for your trades.
Love that analogy.
So you're basically assessing the health of the trade.
To see if it's worth the risk.
You got it. You're looking for those hidden flaws that could lead to losses.
And you do this before entering the trade, right?
Absolutely. It's part of your pre-trade routine.
Like a doctor checking those vital signs.
Perfect analogy.
So we've got our trading system. We're using the trade APGAR to vet potential trades.
Okay, what else is there?
Well, once you find a trade that passes the APGAR test,
Yeah,
you need a plan, right?
a plan for sure.
And that's where the book introduces this concept of the trade bill.
Trade bill. What's that?
It's like a flight plan for your trade.
Okay, I like that.
It's this detailed checklist that helps you plan every aspect.
From start to finish.
Entry point, exit point, risk management, profit targets.
So it's not enough to just find a good trade.
No, you got to manage it properly.
You need a solid plan for the whole journey.
The trade bill helps you stay focused, disciplined.
Even when things get crazy.
Because trading can be an emotional roller coaster.
Oh, tell me about it.
And speaking of emotional roller coasters,
What's that?
the book talks about ongoing learning, self-improvement.
Yeah, always striving to get better.
Why is that so important in trading?
Because the markets are constantly evolving. What worked yesterday might not work today.
So you can't just learn a system and then coast.
No way.
Yeah.
You got to be adapting, refining your strategies.
Always learning, always growing.
It's a lifelong journey.
So we've covered a lot in this part of our deep dive.
We have trading systems, support, and resistance.
Volume analysis, the force index, the trade APGAR, the trade bill.
Wow, it's a lot to take in.
But before we move on to the final part of our deep dive,
Okay,
let me leave you with this question.
another one. All right, hit me.
If the key to trading success really lies in mastering our own minds,
Yeah.
How can we actually cultivate that mental and emotional resilience?
The resilience to thrive in this world of uncertainty and risk?
It's a big question.
It is, but a crucial one.
Think about that. And we'll be back soon to explore some powerful techniques for developing that truly winning trader's mindset.
Looking forward to it.
And we're back for the final part of our deep dive into the new trading for a living.
Wrapping things up.
Over the last 2 parts, we've really explored a lot.
We have, from the psychology of crowds.
Also those technical tools and strategies.
Yeah, all of that good stuff.
But as we've been saying, trading, it's more than charts and systems.
It's about you, the trader.
It's about mastering your own mind, developing that resilience.
That discipline to stay on track when things get tough.
And that's where we're heading now. You left us with a great question at the end of part 2.
Oh yeah, the big one.
How can we actually cultivate that mental and emotional resilience?
How do we thrive in this world of uncertainty and risk?
It's a question every trader faces at some point, right?
Oh, absolutely. It's part of the journey.
And the book offers some really valuable insights.
Yeah, let's dig into those.
It all starts with self-awareness.
Self-awareness. Okay.
What does that even look like in the context of trading?
Well, think about it this way. Trading can be incredibly emotional.
Oh, yeah. It can get your heart racing.
You're constantly faced with winning or losing.
And it's easy to get caught up in those streaks, right?
Like the highs and lows.
Like you win a few trades, you feel invincible.
Then you hit a slump and start doubting everything.
Exactly. And that's where the self-awareness comes in.
It's crucial.
It's about being able to recognize those emotional shifts in yourself.
Yeah, when fear or greed start creeping in.
When they cloud your judgment.
That's the danger zone.
And then having the tools to actually manage those emotions effectively.
So it's like having an internal alarm system.
I like that.
When you're about to make a decision based on emotion, not logic,
The alarm bells start ringing.
time to step back and reassess.
And the book gives us some practical strategies for developing that internal alarm system.
Oh yeah, like what?
One of the most important, having a clear trading plan and sticking to it.
Even when things get heated.
Even when your emotions are screaming at you to do something else.
That's the tough part.
It's like having those rules for yourself, a roadmap
Keeps you on track.
when things get chaotic.
Exactly. And along with that roadmap, solid risk management.
Oh, that's essential.
The book really emphasizes knowing how much you're willing to lose on any trade
Setting those stop-loss orders to protect yourself.
from those big hits.
Because even the best traders have losing trades, right?
Of course. Nobody wins all the time.
It's part of the game.
But the pros, they manage those losses effectively.
They don't let it derail them.
They treat it as a learning experience.
I like that. A chance to refine your approach.
Always getting better.
And this reminds me of something else the book talks about, controlling your ego,
Oh, the ego, that can be a real trap in trading.
especially for newer traders.
They get caught up in being right, you know?
Proving the market wrong, outsmarting everyone.
Like a battle of wits.
But the market doesn't care about your ego.
Not one bit.
It's this giant complex system.
Driven by millions of factors.
And your need to be right is completely irrelevant.
So how do we avoid that trap?
The book gives some great advice. Detach your ego from your trades,
Make decisions based on logic, your system, your analysis.
not on pride or the need to prove anything.
Easier said than done, though, right?
Yeah, especially when you're on the losing streak, it's tough.
But try to view trading as a business, not a personal battle.
Like you're managing a portfolio.
Exactly. It helps you stay objective,
Make decisions based on probabilities and risk reward.
not on hopes and fears.
That's a real shift in perspective.
It is. It takes practice.
And the book also talks about patience.
Right. Oh, patience is huge in trading.
Why is it so crucial?
It prevents you from jumping into trades for the wrong reasons.
Like boredom, FOMO.
Or just because you feel like you need to be doing something.
Sometimes the best trade is no trade at all.
Exactly. Wait for the right setup, the high probability opportunity.
That aligns with your system.
Your risk tolerance, everything.
It's like being a hunter, waiting for that perfect shot.
Instead of just spraying and praying.
Love that analogy. Now, one of the most powerful techniques the book offers for cultivating this mindset.
Okay, let me guess. Meditation.
Close. Affirmations.
Affirmations. The power of positive thinking.
It's about repeating those positive statements to yourself,
To reinforce those beliefs and behaviors.
like reprogramming your subconscious mind.
Yeah, creating that positive internal dialogue.
So instead of beating yourself up after a loss,
Yeah.
you might say, I learn from every trade. I'm constantly improving.
Exactly. Shifting that mindset.
And the book gives specific affirmations for traders.
Oh, yeah, like what?
I am a disciplined trader. I trust my system and my analysis
Powerful stuff.
and personalize them, make them resonate with you.
Make them your own.
It's like giving yourself a pep talk before entering the trading ring.
Get your head in the game.
And speaking of mental preparation, the book also talks about visualization.
Ah, visualization. I've heard good things about that.
It's super powerful for athletes, performers, and traders too.
So how does it work?
You create this clear mental picture of yourself trading successfully.
Seeing yourself make the right decisions, manage your risk.
Achieve your goals.
Like a mental blueprint for success.
Almost like practicing the trade in your mind.
Before doing it in the real world.
The more vividly you can visualize it, the more likely you are to replicate it.
It makes sense. Train your mind like you train your body.
And finally, the book talks about the importance of having a support system.
A support system for sure, that's important.
Why is that so crucial in trading?
Because trading can be lonely, especially if you're doing it solo.
Yeah, you're sitting there at your computer staring at the charts.
Easy to get isolated, start doubting yourself.
You need that sounding board, that reality check.
Having a mentor, a trading buddy, a group.
It can really help you stay grounded, share your experiences.
Learn from each other.
It's like having a team in your corner.
Cheering you on, offering guidance.
And the book even suggests joining a trader's support group.
Like a trader's AA.
Something like that, where you can connect with others who get it.
Who understand the ups and downs.
It's a good reminder that even though we're making individual decisions in the market,
we don't have to go it alone.
absolutely. And ultimately, trading success, it's not just about technical skills or market knowledge.
It's about you.
It's about mastering your own mind.
Developing that discipline, that resilience, that emotional intelligence.
To navigate all those ups and downs.
And that's a journey that never really ends.
So as we wrap up our deep dive into the new trading for a living,
I hope you've gained some valuable insights.
into the power of trading psychology.
It's a fascinating world,
Remember, trading, it's a journey of self-discovery.
as much as it is about financial gain.
Keep learning, keep growing, and never stop exploring that fascinating world of your own mind.
It's the key to everything.
Thanks for joining us on The Deep Dive.